Are you one of those investors who unknowingly owns Russian stocks? If you don't know, let me help you find out. Now, many Russian stocks have gone from high prices to penny stocks, really in just a matter of days. Now, to contrast, some stocks will benefit from the war between Russia and Ukraine. Now, this is not to trivialize the conflict, but how do you know and what should you do? The first thing you should ask yourself is, if you own a mutual fund, an ETF, you have a state pension fund, or you use a money manager that actually owns Russian stocks, will that bother you? And if it does, I'm going to give you information that might help you to decide what you want to do about it. Now, I'm going to jump right in and give you a few examples of investment companies that have recently owned Russian stocks, and they may still own Russian stocks today. You will find that fund companies like Capital Group, American Funds, Van Eck, Delaware Funds, DFA, JP Morgan, Fidelity, and CREF all recently have owned Russian stocks. Now, the reason that I say recently is because things change very quickly, and some companies may be trying to divest themselves of any Russian stocks. But in most cases, the percentages of total assets are very low. That is except for companies like the Van Eck Russia Fund, and really that's kind of self-explanatory. Now, regardless of your moral opinion, anyone owning Russian stocks through their investment portfolio are going to wonder, what happens to the value now? But first things first, how do you find out if you actually own Russian stocks? Now, a common thought is that Russian stocks are really only owned by emerging markets funds or international markets or foreign stock market funds. That may be true, but don't overlook some of the funds that are focused on income. Now, this is the reason why. A company like Russian oil company Lukoil paid a dividend in 2021 of 8.01%. If you own an income fund, you might want to check the holdings of that company to see if other Russian dividend-paying companies are owned by your fund. When I first started to put this information together, I thought I could just list some of the major funds that have Russian stocks. I thought to myself, there really probably aren't too many investments out there that own Russian stocks. Boy, was I ever wrong. Most major investment funds, many institutional money managers, and even some state-run funds own a small percentage of Russian stocks. A recent Wall Street Journal article stated that many pension systems contacted by WSJ Pro Private Equity, including the California Public Employees Retirement System, California Teachers Retirement System, the Connecticut Retirement Plans and Trust Funds, the Florida State Board of Administration, the Teachers Retirement System of Texas, the Colorado Public Employees Retirement Association, and the Washington State Investment Board each said their exposure to Russian investments was really less than 1% of their total assets. But they still owned Russian stocks. So how do you find out if your investment portfolio actually owns Russian stocks? First off, one of the easiest ways is to look on the company's website. All the companies that I've mentioned have detailed their holdings on their company website. Now, if you look at the show notes to this recording, I've listed all the links in the citations. But those holdings on their website only give you really a snapshot of the particular time when that report was done. If you really want to dig deeper, mutual funds are required by the SEC to list their holdings on a quarterly basis. Now, you can find those SEC filings on a database that's called EDGAR. Now, I could try to show you how to navigate that database here, but you may find it easier if you have step-by-step directions. So here's where to look. There is a really great article on Investopedia called Electronic Data Gathering Analysis and Retrieval, EDGAR. So you did your research, and now you found out that you own investment funds that have Russian stocks. What do you do now? The answer really depends upon your sentiment. If you owning Russian stocks goes against your moral beliefs, then you can decide to sell. If you happen to be a participant in a state-operated pension fund, really all you can do is complain to the board of directors. But don't discount the power of participants. Participants are also voters. If you're in a state that has Russian-owned stocks inside of some pension, complain to your governor. Many governors have taken a very tough stance on state institutions owning Russian companies. Massachusetts and Colorado governors have issued orders to terminate any contracts involving Russian companies. But wait, before you jump into action, there are a couple of things that you really need to know. Unless the fund that you own is a Russian-specific fund, the number of Russian stocks is probably a low percentage of the overall assets. That's one of the benefits of your fund investing. Your investment is spread across many, many different stocks. And by the time that you read or you hear this information, the value of that stock is really already down. So you probably already have lost some value. However, there is a distinct possibility that the level of the loss is not known yet. The Russian stock market has been closed since about March the 3rd. If a stock has been halted in trading, the current value of that stock will not be reflected in the overall value of that fund. If your fund trades in shares or in units, the value will be as of the last value that frozen stock traded. If that stock never trades again, the fund will take it as a loss, and it will be reflected in the share or the unit price at that time in the future. With mutual funds, there's always a market. The mutual fund company redeems shares at the end of the day, so there is always a market. Now with ETFs, it's a little different. They're traded like stocks, so the valuation depends upon the time of day that they're traded. Even if you're holding funds that have Russian stocks and it's against your personal beliefs, the damage may already be done. Selling that fund may do nothing but lock in your losses. So could it get worse? Yes. If the Russian stock goes to zero, and many of them are close to that point, it would get worse. An example is going to be the company that owns Nord Stream 2. According to a Newsmax report, that company is expected to claim bankruptcy. Even though Nord Stream 2 is in Switzerland, a significant portion of the company is owned by a giant Russian oil company, Gazprom Group. In the past month, Gazprom has gone from $9.97 on February the 16th all the way down to $1.10 on March the 3rd. And as of March the 3rd, Gazprom trading stopped completely. So you can't sell it or buy it if you wanted to. The Russian stock market is probably not going to rebound for a very long time, if ever. The events in Ukraine have fundamentally changed the way that the world views Russia. The reputation of Russian companies have dropped dramatically, and reputations are difficult to gain and easily lost. Larry Fink, the CEO of BlackRock, puts it this way. The invasion of Ukraine has fundamentally changed Russia's role in the world. Nations have united in imposing sanctions which we strongly support. Global capital markets have gone even further. Capital is being pulled by investors and companies that have long done business in Russia. This demonstrates how the capital markets can work constructively to provide capital to those working within the system and quickly deny it to those who operate outside it. In the case of Gazprom, the Nord Stream 2 project represented about 15 to 20% of Gazprom's net worth. That is value that will probably be written off permanently as a loss. In other words, part of that value is never coming back. Unless you're going to invest in individual stocks or portfolios that are focused on non-emerging growth stocks, it's going to be difficult to run away from any exposure to any Russian-owned companies. You may look at the objectives that are stated in the company's prospectus to see if they've actually eliminated the option of investing in Russia or companies that are connected to Russia. Now, that type of censure is not unheard of. If you look back in history in the 1980s, many pension funds divested their investment portfolios away from South Africa because of apartheid. Divesting from Russia is going to be much harder than you think because of unknown exposures. There are so many banks in Western Europe and Eastern Europe that have ties to Russia and the rest of the world. There's going to be businesses with other investment portfolios that you don't even know about their ties to Russia. There are banks like Raiffeisen Bank, an Austrian lender that first declined to cut ties with Russia. But then the bank was forced to suspend its dividend because of the Ukraine invasion. However, further reports do suggest that the company is reconsidering leaving Russia and Ukraine if the local banks need more funding. Raiffeisen Bank operates in the United States as RB International Markets. OTP Bank is a Hungarian bank that is Central Europe's largest independent lender. OTP Bank has roughly 4,500 locations in Russia. At this time, OTP Bank has decided to keep its ties to Russia. And there's UniCredit, an Italian bank. That's one of the largest banks in Russia as well as the second largest bank in Italy. However, UniCredit appears to be more willing to separate itself from its Russian interest. In January, UniCredit called off a deal with Russia. And other reports indicate that if UniCredit wrote off their Russian alliances, it really wouldn't severely impact the bank's overall operations. If you do own an investment that owns Russian stocks, selling it will really have very little effect, if any, on Russia. The biggest impact is going to be on the Russian government, and it's going to come from other nations that have agreed to sanction Russia. Russian stocks really are more like pawns in a chess game. Now, saying that is not to lessen the humanitarian losses that the Russian government has inflicted on Ukraine. It's really just a financial reality. Even the Russian people are pawns in this war. About 17 million Russian citizens have bought stocks on the Moscow exchange. All of those Russian shareholders' investments have been devastated and perhaps even lost forever. Now, some active money managers in the United States have trimmed their Russian stock holdings, but for many of them, it was too little, too late. If you own Russian stocks, or you're invested in a portfolio that owns Russian stocks, what you should do now is going to be a question of your conscience. Now, this is my opinion, but selling now will do nothing. If it will make you feel better, though, then do it. But realize you will have losses. But please understand that you are not alone to be shocked by the Russian government's callous disregard for Ukraine's sovereignty. Many investment providers have taken the stance of BlackRock. In Larry Fink's open letter, he went on to say this: "We also have proactively advocated with our index providers to remove Russian securities from a broad base of indices. Russian securities today account for less than 0.01% of our clients' assets. Mostly are in index portfolios." If the conflict in Ukraine does upset you, what you can do now is let your opinion be known. Ask your legislators to restrict investment or trade with Russia as long as the conflict exists. The most powerful influence on the Russian government now is going to be other governments' financial sanctions. There will be companies that benefit from the conflict between Ukraine and Russia. Again, this is my personal opinion, but look at investing in companies that are going to help the situation. Now, Russia is infamous for its cyber attacks. As the war wages on, cyber attacks have increased. Companies like Palo Alto Networks and CrowdStrike stand to benefit from their cybersecurity services. Now, any investing involves risk, and many cybersecurity companies are trading at a value that is far, far above the average stock value. On the other hand, there are companies that produce weapons that will benefit from the war. The United States is sending Stinger missiles to Ukraine. The Dutch are sending rocket launchers for air defense. The Estonians are sending Javelin anti-tank missiles. The Poles and the Latvians are sending Stinger surface-to-air missiles. The Czechs are sending machine guns, sniper rifles, pistols, and ammunition. Aerospace and defense contractors do stand to benefit from the increased sale to governments supporting Ukraine. But don't think that investing in these companies is going to be a slam dunk. Any investing that you do should fit into your personal investment plan and your risk tolerances. It should go without saying that the past performance of any stock is not an indicator of its future performance. When you are investing, remember that you should consider your personal situation and your risk tolerance. This information is really only educational. It's not investment advice, and I ask you to please read or listen to the disclosure that's going to follow.